All right, so I did a market update to kind of show you guys what was going on. Last week sucked. It was horrible news left and right. This week we had some better news yesterday. We had amazing news today, so I can't wait to get to that part because I was up at 6:30 in the morning celebrating. Super excited about today's news. So I just have 3 slides here if it'll work. All right. Maybe not. Let's see. Share, present,
You go to
full
the
screen.
bottom purple bar and just try that.
All
The
right,
present
I'm
bar right
learning.
there.
If I close what? Oh, if I close
No.
this.
Just hit that present bar down at the bottom where it's in purple.
Oh, sorry. My video was blocking that, so I couldn't see
There
it.
we go.
Okay. All right, I got it. So, current rate environment. Last week we got slammed. The Fed minutes came out, which documented June 4th meeting, and they basically said, hey, we're going to hike rates 2 more times. We want to keep interest rates higher for longer. And the market freaked out. That's when interest rates went up above 7% again. And then on Thursday, the ADP jobs report came out and said that there was double the expectations than we thought there was going to be in jobs. And when jobs are doing well in the economy, rates are not doing well. But then on Friday, another report came out. BLS report came down and broke it down. And they said, well, yeah, the headline jobs are strong. However, if you look in the report, we have 452,000 more part-time job holders. We have 233,000 more people that are holding multiple jobs. So even though we're seeing a lot of jobs, a lot of it is people that are holding multiple jobs or getting another part-time job due to economic reasons. So that shows a little bit of underlying weakness. When we see the job market break, because that's what the Fed's trying to do, they're trying to break the job market. When we see the job market eventually break, which is a horrible thing to hope for, I hate being on that side of it. But when that happens, that's when we're really going to see interest rates improve for the better. So then yesterday, bad news for all those people who said the market was going to crash. We had 2 different reports that said that we are appreciating for the year of 2023. CoreLogic said we are on pace for 10% appreciation, while Black Knight said that we are appreciating at about 5%. Year over year for 2023. So that's good news. Anybody that tells you the market's going to crash, it didn't crash last year. We were up 6%. And so far, not crashing this year. No signs of that. So anyone who's saying, oh, I'm waiting for rates to go down, you can tell them we don't have inventory. No one is selling, and them going down just a little bit isn't going to cause them to sell. So while you're waiting on the sidelines, look at this, screenshot it, show it to them. The house prices are going up. And what's going to happen when interest rates do come down? They're going to go up even more just because supply and demand. We don't have inventory. Rates go down, a ton of people start shopping, prices go up even more. So don't get left out as these people who have been turning into skeletons have for the last 5 years, sitting on the sidelines telling us the market's going to crash, or they're waiting for interest rates, or they want to live in Sacramento for the rest of their lives, I guess. I don't know. But this is a really good thing to show people, to show them, don't sit out any longer, because while you're sitting out, the market is appreciating despite what the news is telling you. Okay, and then today was the huge news we were waiting for. CPI came out. CPI is the measure of consumer inflation. And this is a chart to show you where it's been. When inflation is high, interest rates are high. When inflation starts dropping, interest rates start dropping. So we had a huge shift this morning. Let's see, we increased 0.2%, which was lower than estimations of 0.3%. So year over year inflation declined from 4% to 3%, which was lower than 3.1% expected. We were at 9.1%, and then now we're all the way here. So I'll just show you really quickly before I hand it over to Christina where that puts us. We are in a 76 basis point move upward. If you don't know this chart, up is good for when the bond market goes up for the 30-year treasury, interest rates typically follow and go down. So this is all the damage that happened over the last couple weeks. And just today, we are killing it and outweighing most of that damage that happened. Tomorrow, we have the PPI report, which is the same inflation report, but it measures wholesale inflation instead of consumer inflation. That is expected to be really good as well. So I'm hoping to break through this barrier tomorrow and finally get some better interest rates. It is an amazing day to get clients into contracts.